The Iran war poses medium-term risks to the Indian economy. But for now, India can handle them. That is the message from the Reserve Bank of India after its latest monetary policy decision on April 8. RBI Governor Sanjay Malhotra has acknowledged that what's unfolding in West Asia could hit both inflation and growth. Energy infrastructure, shipping routes, input costs, all of it is at risk. But here's the shift. The central bank says India's economic fundamentals are stronger than in past crises.
The fundamentals of the Indian economy are on a stronger footing at the current juncture than it was in previous crisis episodes, as well as relative to many other economies.
And that changes the equation. Even so, the RBI is calling the West Asian crisis what it is, a supply shock. This is about disruption in oil, commodities, and logistics feeding into prices from the outside. And that transmission has already begun. Higher global energy prices are pushing up fuel costs from petrol to LPG to industrial diesel. And that's where the inflation risk is coming from. For now, inflation is still contained, says the RBI governor. 2.7% in January, 3.2% in February. Core inflation, the underlying trend, remains muted. But the RBI is not dismissing the risks. Food prices have started ticking up again, and if crude stays elevated, imported inflation will follow. The central bank now sees inflation at 4.6% for FY27, slightly above its comfort zone of 4%, with pressures building through the year and peaking in the third quarter. The central bank's bigger concern is how long the Gulf crisis lasts, even with a 2-week ceasefire announced. If the conflict drags on, shipping costs will rise further, supply chains will stretch, and input costs will climb. And that's when the supply shock could start feeding deeper into the economy. So what does the RBI do? It waits. No sudden rate moves, no overreaction. Just a clear signal. We are watching, we are ready. But we are not panicking, because underneath the global noise, domestic momentum is still holding, Malhotra has indicated. Consumption has remained steady so far, and investments are in place. That is the buffer the RBI is banking on. So yes, the risks are building for the Indian economy, but the RBI's message is equally clear. This is a shock India can absorb, at least for now.